Trading Unlocked, and we are here on Tuesday, July 26, 2022, with the Forex market cryptocurrency market analysis for you. And before we get into everything, we want to show you our disclaimer to remind you that this is for illustrative and educational purposes only. And if you haven't done so already, please like and subscribe to Forex Trading Unlocked on Twitch and YouTube, and also Discord. Oh, that reminds me, I have to pop up the Discord, people. Sorry about that. Just trying to get this going, and we have some people that like to be on Discord when we're out there. So, all right, we're just pulling that up right now. All right, so back to our intro. So yes, also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Alright, with that, let's go to the screen here. I think you can see me now. Alright, and you can see the screen as well. So we have the Forex-Trading-Unlocked.com website pulled up here. And let's see, you don't need that. And here we go. Sorry, just getting the there we go, screen, go live. Alright, so we got a couple people on Discord now, you can see us. Alright, just getting everything rolling here. Alright, so on the Forex-Trading-Unlocked.com website, we are going to pull up the Market Analysis Education tab and hit the Workstation button. And now we're going to slide down past all of the economic numbers and come down to where we have the euro already pulled up. The euro has been trading on lows for most of the day. Let's go and check out the Dixie first. Alright, so the dollar index, as we all know, has been trading on support for just a little while here. Past week and a half, it's been trying to push lows, but the last 4 sessions, it really hasn't done much at all. It's just barely nudging down a little bit. The euro and the pound have been under a little bit of pressure, especially the euro today. That's one of the biggest things that's leading the slide in the dollar index. Now remember, we have the 2-day Fed meeting going on today and tomorrow. That is going to have a big impact on what happens with the marketplace. In fact, we're going to pull up the CME, check out what the interest rate complex is doing. Remember, the futures are always in a lag. Everything we're doing here is at least in some sort of delay. That's why it's for educational purposes only. All right, and we have the bonds, which are up 142.06. So this is pretty big. So going into the Fed meeting, rates have been going lower market basis wise, and we know that the odds of a 0.75% rate hike is very, very likely on the table. The chance of maybe even a full percentage point is also not necessarily out of the realm of possibility either. So, all right, let's now take a look at what's going on with the dollar index as far as our retracement capabilities. If we go back to this last swing low and we place this here, you can see that we've already penetrated the 50% level, and we're trading right in this little area of the 0.618 and 50% area. That's a key spot as far as for support for the dollar index, and I think that this is going to coincide with the Fed meeting tomorrow, where we might see a spike high in the bonds and the 10-year, meaning that market rates are going down short term until we have the rate hike, in which case bond prices and 10-year prices should start to decline, meaning rates go up with the trend. Remember, the overall trend for interest rates is higher, meaning prices are lower in the interest rate markets. And this will have a little impact at least on the currencies, because we all know that interest rates are a function of currency pricing. All right, so now let's take a look at the Euro US dollar. And by the way, any of you that are out there listening in YouTube land or in Twitch land, don't forget to leave some questions on the chat. We are here to answer your questions live, and I'm just sorry, can't just look at my face here. I gotta work a couple of screens here to pull up this analysis for you guys. Alright, so we got some people here on YouTube and Twitch. We got a like already on YouTube. Thank you very much. By the way, every like and every little interaction on chat that helps us with the algos, we appreciate it from all of you. As well as anyone who leaves comments. Also, comments are big for the algorithms with YouTube for sure. So, alright, so we got that going. Alright, so no questions on there and on Twitch. Okay, All right, cool. And then also Discord. Can't forget you guys. All right, so any questions as we go along about the markets we're talking about, just feel free to jump on the chat. All right, Euro US dollar is heading lower today. I believe that most likely you're going to see a continuation of this spike. Now, what was interesting is last week we peaked out right around the 50% level of the fib, and now the low today is actually on the 0.236. So harmonically, we're really hitting the fib levels a lot over the past couple of sessions. My view is that no matter what, the trend is your friend, and we've made consistently lower move highs and lower move lows. The overall slope of the trend is actually in a nice basically 45-degree angle, which helps to maintain relatively solid trends for a long time. Okay, now we've already seen that we've made a lower move low back here towards the middle of July, and then last week we topped out here making a lower move high, and now we are making lower move lows on a daily and hourly basis. So right now the trend overall is your friend. It remains in a sell rally forecast for the Euro US dollar. Now trading is going to get a little bit quiet and thin over patches as we get closer to tomorrow's economic release by the Fed. The odds of them doing nothing would definitely rock the market. Right now there's already a 3/4 point factored in for the most part, with a bias towards higher rate raising coming up in the next couple of meetings as well. So we'll see what happens with that one. Let's see if we have any questions. Any of you guys trading the euro that are watching right now, we'd like to know if you got any questions about the Euro US dollar. Please feel free. Hey, we got a couple more likes on YouTube. You guys are fantastic. We really appreciate it, guys. Thank you very, very much. All right, and also right now I'm just sending out a little post of the, there we go. Okay, so Euro US dollar, let's figure out some numbers here. So we know that harmonically we came to a nice top here, lower move high, and also today's low is pretty significant also. We're bouncing off the Fibonacci pivots very, very well, but we do know the trend is still here. So how far can we go? Let's go for an extension here, and we'll go from this. Oops, wrong one. Alright, here we go. Alright, so fib extension. And for this, we're going to have to go to the weekly. And maybe even the monthly. Okay, so as you can see, there we go. Alright, so we have on a monthly basis right now where we tag down to a low of, what was it, 99.52 in the euro. So if we continue this downtrend, which I can't see how we wouldn't, the fundamentals are all there, we have an initial target here of 96.92. That's a nice little target for us to the downside. Now let's get back to the daily. So if 96.92 is our downside target, and we're trading at 101.30, so 96.92 is basically 97 even. So you're looking at 4 handles plus another 30 pips. That's 430 pip move for on a month. Now obviously this is off a monthly chart. This is not happening in a couple of sessions. However, with the current trend the way it is, we're in a very good area where most likely we're going to continue to pressure support, take out the lows, and be not just hanging around parity. I think we have a really good chance at hitting that 96 target, because I have 95, 94 anyhow by the end of the third quarter, somewhere around the end of November. And that's if we just have a gradual decline. We'll see what happens with the ECB coming up and the reaction to the US Fed. We'll see how this all pans out. Right now, I would still be confident on the side that the US Central Bank is the one that's leading the charge with the most aggressive rate hikes moving forward. Okay. Let's see. All right. Now let's get back to here. So we got a downside number here for you guys. Now let's take a look at a potential upside number. So let's just say that things somehow magically, the numbers in the EU and the EU countries start to turn around and show some signs of, I don't know, relief. I don't know how that's going to happen, considering that right now they are in a complete disarray. So I would say if we do turn around back to the upside, seeing that Fibonacci has been playing out pretty well, that this 0.618 area would be the area to look for. Now, as far as downside, obviously we have a monthly target. This is a much shorter term target. If we take out the last swing high established last week, then it's very likely that we could come back up to this area here. So 102.82, that's our breakout level that we need to push through. But then 103.60 that's not that far away. That's only another 80 pips. So that's not the biggest move as far as your reward to risk ratio. Even from here, you're risking going from 101.26. So basically you're going up 2 basis handles. $2 is not a bad move, but when we're looking at the move to the downside, which is looking at a $4 or $5+ move, that's a much better reward to risk ratio. So if the bear trend remains intact, then this last swing high here around 102.82 should remain in place. So even if you were shorting it here, and we're not telling you to do so, by the way, we are short the Euro US dollar for transparency's sake, but 101.26 versus 102.82, you're looking at basically 160 pips, a little under that, 155, as risk on a trade that you're looking to go down to, once again, 96.60 area, basically. So that's a really good reward to risk ratio. It's also a trade that goes with the trend. It will take a while to manifest. Right now, it is a grind lower, and also it does have some nice corrective rallies that you have to fight against. So don't expect this market to just slam and trend, like especially as violently as the US dollar yen trade, which we'll get into later. So let's see if we have any questions so far out there about the Euro US dollar as we head into the pound. And, oh, we got a little message here. Let's see. Sorry, folks. I'm just trying to get through this note here. Alright, sorry about that, folks. Just trying to get this question right. We got a really good question here as far as about the euro. Okay, so the Euro US dollar, there's a good question about talking about the short and versus the bullish scenarios for the Euro US dollar. The shorter term trend to the upside, let's say we do get to pressure resistance, that's a counter trend trade for one. Besides being a counter trend trade, there's not much reward to risk ratio, meaning that even if you're right, there's not much to gain on the trade, and if you're wrong, it's just like really throwing away money on that one. The downside trade, now if you have a valid sell signal, which already had occurred a couple days ago, then you would be potentially short like we are, but now is not the time to sell into a move that's already occurred. Not that there is not a lot of reward to risk on the table. However, tomorrow we do have a Fed meeting, so I would expect to see some head fakes. The algos are probably going to kick up. If you don't have a position going into tomorrow, if you don't have a position on right now already in the Forex markets, I highly suggest that you wait at least until after all the U.S. markets are closed tomorrow, and then wait until the Japanese markets come online, depending on where you're in the country, around 6 o'clock p.m. in the U.S. So once that happens, you'll see how the world starts to gauge. There's going to be a lot of head fakes, I would assume. I really don't think that you're going to see the Fed announcement come out. Let's just say that they do the 3/4, which is expected. Are we going to have a knee-jerk reaction pushing the market up to the upside to an extreme before it starts to trend lower, knowing that we're heading into another rate hike? Not so soon. It's in 2 months. There's no, it's in the September or something is the date. I have to look that up. Forgot. That's not off the top of my head. So we have a little bit of time to absorb what happens with these numbers, and the question will be is, do they believe that Powell is going to stay aggressive and maintain yet another 3/4 to upwards of a point, especially with the way the economic numbers have been faring in the U.S. over the past couple of release dates in the past month or two, which really have confirmed what we've all known over a long time, is that we're not heading into a recession. We already are in a recession. So, all right, so we have our downside and upside in the euro. Be very cautious going into tomorrow's trade. Let's look at the British pound US dollar. So the British pound US dollar is pretty much in limbo, trying to edge higher, and this is why you see the dollar index, how it was just kind of barely making new lows. Well, that's because the pound and the euro are basically only nudging through the barriers right now, pushing the counter trends. Now the thing is that with the British pound US dollar, you have a much greater ability to sustain a neutral to somewhat positive bias. It's still in a bear trend. However, its slope is not as steep as the euro US dollar, and fundamentally it doesn't have as many issues as the euro does. Now it has a lot of the same, just not to the nth degree. Not to mention, remember there was Brexit, so the UK is no longer part of the EU. This is good for the British pound US dollar. So as far as, like I said, with the euro, if you don't already have a trade going on, and this goes for all the FX markets, wait until tomorrow afternoon. Don't be a gambler. It's because that's exactly what you'll be doing. You will be gambling no matter what. All right, so let's go back to here. All right, we got that going. And on Twitch, okay, no questions there. All right, on Discord. All right, cool, great. All right, so British pound US dollar, let's see how we can go to the upside. All right, so if we take these, you can see that we barely touched into the 50% area on the fib. We have a little bit more to go. I could see it's very easily spiking up to this area into the Fed meeting tomorrow. So 121.54 from where we're at right now at 120.29, you're looking at just over, it's basically 125 pips. Not a bad little rally to look forward to, possibly. But as far as where would your risk be, well, that's the tough one, because you got to think that, let's say we go sideways today, which is very likely. We're at lunchtime trade in Chicago, so we only have 3 more hours before the markets close. And when that happens, it's most likely between now and then it's going to be very flat. I wouldn't expect a lot of volatility or trending. In fact, it could be just a flat line dead trade. So it's a range trader's trade. So I would expect a lot of people are going to be selling into the recent highs and recent lows and buying into the recent lows of the past 2 sessions, not expecting that there's not going to be much of a breakout, meaning that if we take out the high of today, tomorrow, early before the release, or conversely the low of today or yesterday, tomorrow, either way, I don't think we're just going to explode and start a trend. Now, once the number comes out, be careful, because it's very likely we're going to see a big head fake either to the upside and then we tank, or vice versa, we head down south and then all of a sudden see a knee-jerk reaction to the upside. Wait for a valid signal, trade after this noise. For an economic release such as this, it's not that we don't have an expectation we think is not going to occur. It's just a matter of the volatility. How do you trade it safely? The best way would be with options, not with outright futures or a Forex contracts. So just to be mindful of that. And then for transparency's sake, we are short the British pound US dollar, just to let you know. So, all right, so let's see how many likes we have there on YouTube. All right, we have 3 likes on YouTube. Got a couple people watching. Thank you guys for your participation. We really, really appreciate it. And then we have some people on Twitcheroo here. Let's see, got to make sure we send out the tweet ourselves so people can come and join us. All right, that's good. All right, so British pound US dollar, we have an upside projection. Is there much more on the table than that? Not really. There just really isn't. The trend is still your friend. Now, if we come out to here, you can see this gives us a little bit. There we go. Gives us a little bit of an area here to play with. We have this downward sloping resistance line that most likely is going to keep the trend intact. And if you don't like that one, we got this one. So maybe it gets a little bit beyond this one. This one's holding the trend intact in a major way. I would assume that most likely it will stay intact, and we have a sell rally forecast. But it doesn't mean that we're not going to see a nice little rally going into tomorrow or after the number before we see the slide. Now, once we take the slide, then I think we have some nice areas to look for, because in that case, we look for our fib projection. Oops, wrong way. Oh, oops. Duh. Okay. Let's go to the monthly. All right. So we get down to 113.46. So now there's, on the monthly basis, so this would be a much longer term trade, there is a really good trend wave down to catch. It's most likely that it's going to be sustainable for this trend because most of the fundamental factors globally are not changing anytime soon. Unless you see inflation stopping and a whole bunch of other things just reversing gears, there's no reason to think that the pound has any real sustainable strength. Now, is it going to parity like the euro is in Swiss franc? Probably not. At least if it is, it's not going to happen anytime soon. It's more likely that that would occur probably 3 quarters to a year, 4 quarters from now, upwards of a year from now, and then in that case it would mean that the whole world's in dire straits. Inflation is everywhere, and it would not mean mostly that the U.S. dollar is that strong. It would mean that the pound is just that weak. They don't have quite the issues that the EU does. They're a little bit more sustainable on their own. So with that being said, I think that helps to hold them up. If they did hit down at parity, I would expect them to bounce off of it and tread water around there. As a longer term trend, I think that it's going to smooth out as the euro continues to decline. So the spread there also is in strength with the pound versus the euro. I would expect to grow as well. In fact, since we're talking about that, let's BP EUR. And as you can see, just today alone, the euro is tanking, the pound not so much. Shaboom, shabam, we have a nice rally forming. And if you look at this is actually a nice trade here. Think about this one. Here's a shoulder right here. And then we got the head right there. And then, well, you could say that this right here is the shoulder right here. All right. And then we take this through here. As you can see with that, we had a nice, as you can see, the trend was lower, pound versus the euro. This trend has very likely reversed, meaning that our expectations are much more to the downside in the euro than the pound, meaning that the pound is stronger than the euro. We see that we have a reverse head and shoulders formation here that was confirmed a couple weeks ago with a breakout to the upside. In doing so, we came off of a higher move low, making a higher move high, a higher move low, and now we're trying to make a higher move high, which odds are sometime between today and tomorrow it's still going to happen. I mean, unless you have some major rally in the euro, and without maintaining any type of show of strength in the British pound, which not like that could not occur. But right now it seems like that trend is definitely the way it is. I would follow that trend, and that also once again helps to give us the rationale and why we're having such an indifference in the pound US dollar right now as well. So hold on to your hats, folks. I know you're looking for trades and want to hear some great expectations for today, but you got to realize that we're right in front of a Fed meeting. I mean, it is what it is. You can't make this stuff up. So, and that's the most important thing. So let's see. No questions. Oh, we got a couple more people on Discord checking us out now. Sweet. All right, and there we go with that. All right. Cool. All right, there's that. Back to our thing. All right, so pound US dollar, as far as downside, we got the numbers for there, and we got the numbers for the upside with not very much to the upside. I'm not saying there's no reason not to be a bull here. We could easily have a total breakout to the upside, and we could have a big reversal of fortune as far as these currencies versus the dollar. But right now, the trend is your friend. So, and I believe that wholeheartedly that this is just a corrective move, a rally to sell. But getting a little spiky over the next 24 hours. And then to the downside, don't expect very much. In fact, I would guarantee you that, well, I can't guarantee you, but I would say most likely you will see more bang for your buck in that pound euro trade as a trend than you will in the pound US dollar trade. It's going to be choppy. Not that we won't have big sell-offs like this or conversely rallies like that, but a lot, if you look at how we've had these zones here, look at this lack of volatility, if you will. I mean, even where we're at right now. So these pockets, there's not much, there's very much indecision. Look at most of these days, there's not much of a body, and the market opens and closes basically in the middle of the range. That's a lot of indecision, and these are on days where the dollar was strong versus the euro, but not necessarily versus all the currencies, because they don't all trade against or for simultaneously. There's always a little bit of divergence and indifference. But during that time, you had a lot of dollar strength coming into the euro and some other currencies, the euro and the Swiss and the yen, but the pound, not so much. And that's because they have many more fundamentals that are in their favor. One being that they are an energy producer, exporter, excuse me, and they're very self-sustaining as a country and as a sovereign country, once again, away from the EU. And unlike the EU, which is energy dependent and has all kinds of other issues. All right, so let's go to the US dollar Swiss. This one has been, talk about a choppy, sloppy trade the last few sessions, and especially yesterday, it looked like it wanted to spark a rally. Today, it looks like it just wants to head and make new lows again. I think this is just because of the pressure on the dollar right now. You have a little bit of this playing with support. It hasn't made new lows on the day. It made a new high on the day. It made a new daily high. So right now, the short-term trend is bearish on the hourly basis. On the daily basis, though, we've took more of a neutral bias as far as for this market is concerned. Let's wait for tomorrow, excuse me, to shake up. I would expect that you will see a rally out of the U.S. dollar Swiss moving into the number tomorrow, basically because of the interest rate hike as well as the expectations of further hikes in the U.S. The Swiss central bank is definitely leaning towards being a little bit more on the raising of interest rates bandwagon, however, not as aggressively as not the ECB, but as the U.S. Fed. But we'll see what kind of reaction they have. It's not out of the realm of possibility that the Swiss make a major interest rate move, and that could really put, while the other currencies may be falling against the dollar, because now they're making interest rate moves, it's starting to slow some of that decay in some of these other currencies. But if the Swiss have done this before, where they're going to take the bullet, meaning that instead of mamby-pambying around about doing a quarter point here or whatever, saying, oh, we'll end a little bit of we're going to start lowering our quantitative easing, they're just going to come out and say, okay, we're done with this, and we're going to raise the interest rates 2 percentage points. Is that going to happen? Probably not. But don't be surprised if they were to do something like that. The Swiss have done that before, especially where they were holding up the euro. This was already a couple years ago. And they came right out in the open market and said, we are no longer buying euros to support their currencies. We're buying our own. We're transferring back to our own currencies. And they did a couple other not market manipulations, but open market actions that literally sucked out, if I remember correctly, just within a period of a couple of hours, over $1.5 trillion in the equity markets in Switzerland and Europe. So the Swiss investors took a whomping of a hit, and this all happened within hours. There was nothing you could do about it. However, short-term pain, and it was rough. Within literally 6 months, the market basically had corrected itself, and their burden of trying to hold up and support the EU currency was gone. So they were no longer artificially helping to keep rates low by buying their bond market. They were also no longer buying the currency. They were reverting it back to Swiss francs, which in that dynamic also made all kinds of other little arbitrage trades at that point. All right, so now that my point has been made with that, we'll see what happens. We don't have any a real bias here. Right now, I would say that we are looking to find a buy signal or a sell signal. Either way, the one thing I have to say is that the slope for the downside to the bears has been very tight. By attrition, we're going to come out of this little wedge to begin with. Tomorrow is a great day to break out to either the upside or the downside. I would key off of the low from 2 sessions back. If we fail from here, obviously, well, we're making newer move lows, which will keep the bear trend intact. Remember that the US dollar Swiss is in a long-term bullish trend, short-term bearish trend, and we know that it's definitely a huge swing as far as, or it will be a good swing trade developing, because once we start to get into these higher rates fully, remember we did 3/4 of a point with the Fed at the last meeting, another 3/4 coming on the table. If the Swiss don't do anything, we're going back to parity. So it'll be really interesting to see what the reaction is tomorrow and which sort of speak does come out. So I mean, right now we're in limbo. Don't try and force a trade. So right now I'm trying to explain dynamics to you about what to look forward to over the next 24 hours once this number hits, and then how to process what's going on, because you're going to hear what I'm talking about right now being talked about tomorrow afternoon, Thursday, Friday, and on all the weekend talk shows when it comes to the financial sector and economics. And especially because these do have a lot of bearings. For the first time today and yesterday, I heard them talk about Powell raising the rate tomorrow, and then maybe pausing. Now, not stopping raising interest rate, but pausing. And it's very possible that they would stop for, say, one meeting and gauge the economic numbers that are coming in, because anything that they think that they've done that's had an impact, they're only first starting to see the impacts on the economic numbers from stuff they did 6 months ago. So we need to pump the brakes, especially because right now we're destroying the velocity of money, which if that's the case, and that's what they want to do, then maybe that is what's what's going to continue to happen, and we can expect to see very excessive rate hikes, upwards of a full point, in the next 2 meetings to 3 meetings. We'll see. And then there's the counter action as to how does, say, like the Swiss react to this, and which this could set off a very big divergence where overall the euro, it's tanking. Euro US dollars in a bear trend. There is no reason in the world to think that it can pull itself out of that trend until it hits down toward like definitely below 95 cents. I would say that it could probably reach 88 cents between now and the end of the year. So maybe the end of the year is a little presumptuous, but at the way the rapid rate of decay it is, and the numbers that are coming out of Germany and all the other EU countries, especially Germany, which is the biggest powerhouse, it's not boding well. And then I think what you could see is that the euro US dollar continues to decline, pushing the dollar index up. And at that time, same token, the pound US dollar may actually be in a neutral trade, and the US dollar Swiss may actually be in a counter trend trade. Remember that right now the US dollar Swiss is weak because of our interest rate policies and a couple other things. But if the Swiss start to say, well, we're going to defend our currency, well, I'll tell you what, when it comes to a currency war, I don't think that we're going to win against the Swiss. And not that they can overwhelm us or crash the dollar, but they can relatively influence the slowing down of dollar strength versus other currencies globally. And so we'll see how, especially because the Swiss at that simultaneously should gain strength versus other currencies, and making them, there's cross spreads then there as well. So as far as targets, let's take a look at what we got. So we have from here to here. So minimally, you can see it getting up towards this area right here. All right. Okay. So to the upside, we have 96.93, 97.47. Now by attrition, we're going to come out of this wedge that's right here. Are we going to explode to the upside? Explosion, I think, is probably not the way to go about it. I think it's going to be a grind of a trend. Is it going to be as steep as, say, this trend here or this trend here? Probably not. I could see it actually just kind of chopping around, slowly inching through. I can see it actually not even breaching this last swing high of 98, 92-ish area for, I don't know, another 4 months, so something like that. It could literally stay in a choppy zone. So, but right now we have a short-term buy, not buy signal, but it looks like it's trying to hold support. If that's the case, this 96.93 to 97.47 resistance band is most likely going to put a capper on any trade that starts to develop. All right, now for the downside, this is where it gets a little bit more. Okay, so to the downside, oops, forgot that one. Okay, so the downside. There we go. So the downside, we have 0.236. The other one, let's see. There we go. There we go. Okay. So we have, for you bulls out there, if we start to maintain a sideways trade, even we should have a good chance of running up to this 96.93 area. 97.47 would probably be the extreme. Now, if the dollar starts really rocking it to the upside, meaning like the pound and everything else starts collapsing against it off of this number, well, then I would say it's a good chance that we will shoot up into this 96.93, 97.47 area. If the bearish, short-term bearish trend is to continue, well, obviously we got to take out the last swing low of 95.99, and then it'll be a grind down to 92.79, 92.20. Now, I'm not saying that we can't get there, and that this market couldn't turn bearish, but the odds of this happening right now are just pretty steep, as far as what I can see. Let's see. Okay. So the upside, we have this nice little area, and this would be a good fading area. So if you're a bear, truly a bear, this would be the area that you would want to sell into. But I do believe that you gotta use caution, because if we breach 97.47 or sustain a trade above here, well, then you have some other issues, and you can key off of this swing high to that swing low, and there you go. So this is why we have this capping out right here for the US dollar Swiss. But the sell-off target, that's in the short run. We are bullish. If there was to be some sort of debacle in this currency, meaning like the Swiss raised their rate like literally a point or a point and a half or something like that, well, then we could see support getting taken out and then coming down towards these levels right here. So now what you could also say is that we have a longer term shoulder right here, and then we have a longer term low right here. All right, so as you can see, shoulder, neckline, come back, we have the head, neckline to the shoulder, and then we come back here. So if this is a head and shoulders, then that means that if we come up into this 97.47 area, we're probably going to keep on climbing. Okay, so see what I'm saying? That would turn this right here. Let's just say that this low holds. If it does, this is our second shoulder for our head and shoulders pattern, meaning that it's very likely that we're going to break out to the upside, and parity once again will be in jeopardy. Now, if we fail from where we're at, I think that you're pretty much pushing this correction. The key level to watch out for is to make sure that we don't take out this low here at around 95.01. If we take that, all bets are off. Then this becomes very, very viable at this area right here. All right, let's see what we got on YouTube. We got a few people watching. On Twitch, we got a couple people watching. And nothing on Discord as far as the channel stuff. Okay. All right, cool. All right, so we have the numbers for the Swiss. Let's go to the US dollar JPY. All right, US dollar JPY, this one has been another nail biter, just churning around the past couple of sessions. But this one overall, we're bullish. Until the BOJ does anything, you can key off the low from a couple sessions ago, and I would look to not sell this market right now. I would only sell this market if you have a valid sell signal, which, by the way, there was another high probable Japanese candlestick pattern that occurred. All right, and we fell just short of the 50% line. So this is a really good low that was set back on Friday. I would key off of this low. Trading above here keeps us in a bullish posture and keeps the trend intact. I would say we have a good chance, especially with this Fed meeting, after the release tomorrow, sometime between the afternoon or when the Asian-Japanese trade begins in the evening, we'll probably see a not huge, tremendous rally, but yeah, I could see us having a little blow off or move to the upside, pushing new highs. And are we going to get to 140 in a heartbeat? Probably not. But I could see, I mean, we're trading right now at 136.66. We're not that far away from 140. And we'll see what the number does. So right now we are bullish according to what we have here. Also, we had this sell signal here. This is a 3 inside down. See how we rallied to this point, and then boom, boom, these two little red candles. That's a 3 inside down, and we hit the 50% mark on this right here. So that means that we're pretty solid with that low. If we take that low out, that's when I would start to get a little nervous on the US dollar yen trade. But nervous in the sense that it's still super bullish, it's just in a corrective move. I like, especially with this one, because it's such a bully of a bull, don't trade this unless it's to the long side. You're going to get really chopped up going to the short side. I would look to take profits out of longs instead of going short, and then look to buy back into areas where you find corrective moves to, like what we had here on Friday. So let's see if we have any questions about the US dollar yen. No questions out there. No questions out there either. Okay. All right, so moving right along. AUD, USD. Spiked higher once again today, and we're lower on the day. This is where you're starting to see these markets are running out of gas. They've all been trending against the dollar for the most part for the last 2 to 3 weeks. We're coming into Fed meetings tomorrow. Does that mean they're all going to stop on a dime and then change directions? Absolutely not. But it does mean most likely that these trends are still in place, and unless acted upon, they are going to run out of gas, they'll come lower, and then we'll see what type of what type of move we get. Now, I would think rationally that what we're going to see is a big turn to support after the number tomorrow. Let's see if we go by this. Yeah, between the 0.382 and the 0.50%. That's where you fall with this one here. So this is already topping out in a good area. We could still see another spike high going into the number tomorrow, but I would start to look for reasons to sell this market. It is in a longer-term bear trend. We have a sell rally forecast, and especially because there's a lot of new COVID things going on with things in Australia, and I believe that their economy is in for a whack and a rude awakening. So if that's the case, then that would pan up with our dollar strength scenario coming in on the number tomorrow, meaning that interest rates start to tank in price, go up in rates, helping to support the dollar. Higher interest rates help to definitely boost any currency whatsoever versus another. All right, so that's the Australian dollar, US dollar. We'll give you, well, so to the upside, yeah, that's the upside. We're pretty much capped. To the downside, I would say look out below. We can start with the, there we go. Okay. There we go. All right, so we can start with the, right here. And then, .79, yeah, 0.6794. Okay. All right, let me get rid of this. Sorry, folks. Just want to try and line up this drawing as best as possible. Come on. There we go. All right, so the market is ripe, not necessarily to become a big bear, but definitely for a corrective move down to this area here. Should it come down in that area and bounce, well, that would be a lower move high, then a higher move low, and then we'll see where we go. So we'll see what happens over the next couple of 2 sessions. Odds are, once again, I would expect a spike. Not that I would say fade any rally tomorrow. I think what you need to do is wait until after the close of the U.S. markets tomorrow, no matter what, then reevaluate things and see what you want to do. Okay, so with this one, let's look for these expectations. Once again, to the upside, we pretty much met them, so I would use caution on that one. If we do sell off, let's just say this becomes our new lower move high, and we trend down into this area here. Okay, if we bounce there, that would be a really good area to set the range for potentially firming up the Aussie or slowing down the dollar rally. If we trade below the 67.81 though, that's pretty bad, and then I would expect us to hammer support. Now, I don't expect a huge slide. I think that we'll have something where we have this low here, and it's going to take it out like it gets down to this low here. So it's going to be a grind. It's going to be an ugly trade, constantly fading against itself as it goes down, and just be mindful of that. It's going to be a rough one, but I think overall, fundamentally and technically, you're good if you stick on the bearish side. All right, now let's go to New Zealand dollar. And this one is really looking weak today, just hanging off of its lows. This is in a very similar situation like the Aussie, except this is one I think is more, I think the Australian dollar is relative to the pound, like the pound is to the euro. So the Aussie, or the New Zealand is to the Aussie, meaning that the New Zealand dollar is kind of like the euro US dollar. This market's probably going to continue to bang lows. It doesn't mean that we're not going to get still push the correction to the upside into the Fed meeting. Absolutely not. Excuse me. But overall, the fundamentals, technically this market's oversold, but it has been for a long time. So that's out the window. Fundamentally, we have a lot of geopolitical factors and in-country factors that are really leaning towards just not supporting their currency. It's just they're in a lot of debt trouble. And there's a whole bunch of other things that are really just squeezing this currency. So this will be another one where there's going to be divergence, most likely, where as the dollar index still gets stronger, it'll be driven by like the euro and the New Zealand dollar and the US dollar yen. Pound and Australian dollar, not so much. Those are the ones that are going to probably be drifting, meaning that they're holding back. Uh-oh, that's not good. That's an amber alert. Sorry about that. That's not a good sign. Child alert. It's terrible. But in Chicagoland, there's lots of things. We're always on the news. So, but anyhow, once again, so that little divergence will mean that the dollar index is not going to see very big corrections. You can see a lot of that, how it's correcting now. It's not that severe. You're having big moves in these other major currencies, but the other ones are lagging. They're not as strong. They're not that weak versus the dollar. And I've been saying for months that it's not that the dollar is that strong. It's that all these other currencies are that weak. Some of them relatively that have been that weak against the dollar are not necessarily getting to get stronger, but are going to be on a slower slide to even having a correction versus the dollar while you maintain the bullish trend in the dollar versus many other currencies. So we're coming into a very good inflection point over the next couple of months. You're going to see this more and more as we excuse me, get into the fall and into the wintertime trade. We're going to see volatility, one, is not going to go down. If volatility dries up towards the end of the year, I'll tell you what, I will be the most shocked person out there in this industry, because there is no reason between the U.S. elections, high inflation, The Russian-Ukrainian war, that, by the way, no one even really talks about anymore, but that is going on. It's funny how they didn't talk about the Ukrainian war for 8 years that's been going on, and they only waited until Putin got involved into the eastern part of Ukraine. I'm not discounting what's going on there or Putin either, but that mess has been going on for a while, and now it's just becoming a mess that we're somehow subsidizing. So, but hey, what can you say? And these things are going to have a lot of impact, though, on the currencies. Once again, those are going to help drag the European currencies. The sanctions on Russia are having an impact on not only the euro, the pound, and the Swiss, but also on the Japanese yen. There's a lot of issues now because of these sanctions that they're going to still be with us. So hence, volatility is not going to wane. Now, should cooler heads prevail, Putin pulls back and whatever, and all kinds of other things happen, well, that would be a different story. I don't really see any of that happening. Not that it can't, not that it won't. I would encourage it and hope that it does. But the reality is right now the trend is your friend, and as far as a market bias, I would keep that into consideration. So let's look at the US dollar Canada before we go on to the cryptos. If you guys got any questions here, guys are quiet on the chat today, but we got the likes. Thinking about that, thank you for that. Hopefully you've been sharing it with the Twitter and other things. All right, so we'll go on to the US dollar Canada before we get to cryptos. US dollar Canada. All right, this one here made a lower move low, and it's trying to get back to making new highs on the day. It's positive overall. This one is, you want to talk about a pound your head and pull your hair kind of trade. U.S. and Canada just can't seem to get along. It's kind of funny. We got a communist running Canada and one in Washington now, and for some reason they don't want to see eye to eye on things. Until they do, I think that we're going to still be chopping higher in this range of U.S. dollar strength into Canadian dollar. Overall, it's in a big wide range trade. Obviously, the past week and a half, it's been trending lower. But if we move, you can see that since February, we've been bobbing around this 127. Let's see how we can put this right here. So in February, let's go to 127. So we are trading down to 125 below it, up to 131. Okay. All right. So we've been pushing this basic range trade just slightly higher. The trend is sort of bullish, but I would wait for a signal. This is a real hard read. Today, if this closes where it's at right now, this would be a short-term buy signal. So if you read my book, High Probable Japanese Candlestick Patterns, there's a pattern called the piercing line. This would be now it hasn't happened yet because the session's not over. This market could end up closing and making new lows on the day. If it was to settle where it's at right now, the US dollar Canada would be giving you a short-term buy signal that I would risk today's low plus a few pips as a buy. I'm personally not taking this signal. I got positions on in other markets. It's a Fed week, and tomorrow I really think we're going to have volatility. I wouldn't touch this trade with a 10-foot pole. For those of you that are bears, just be mindful that if we settle where we're at right now, key off of the high from yesterday, because if we get above that, odds are we're going to get some fresh buying and bullishness into the US dollar Canada. If we take out the low here of today, well, that's pretty much meaning that we'll just inch lower. I don't think we're going to have any type of big sell-off. Like, see how we came out of this area here? If you look at where we're trading here, just above this 128, 128.85 area, this is where the market had struggled with resistance and also kind of found support basically just below it. There's no in-between here. Outside of that, explodes higher and lower. This one time, I don't think you're going to have that happen. I don't see us just sliding lower like this. I could see us chopping around and literally going sideways between 120, basically 127 even up to 130 even. That's only a 3-handle range. It's not a lot to really look for. Now, if we can breach 129.47 this week, and we have this buy signal confirming a short-term trend change and a short-term buy signal, well, then we got a good shot at challenging the 131 area. But to the upside, I don't think there's that much. Remember, we have a conflict between the U.S. and Canada alone, plus the U.S. and Canada and a bunch of other countries when it comes to trade and what have you. So these things are just not on a daily basis. Anything could change for the better, meaning that the U.S. dollar Canada could become a bear. And overall, as we've been going on the daily, you can see that we're making new highs on a monthly basis, but we don't take the highs out by very much. We've already taken out the highs for the last couple of months, but look at where we are. If you look at this here, remember how we got this little short-term buy signal that is forming right now? Let's say we get it. That means that we're probably going to make a little run, like I said, up into those areas, but then fail. You can see where is the openings and closes. They're all relatively right to where we're trading right now. There's these big, long wicks here. That's what they're called when you have a chart like this in candlestick patterns. Having those long wicks shows the majority of the trading, where the extremes of the trading is. Where's it actually really opening and closing and hanging out? Where's the body at? And we're hanging in the body. So I think that this is a bias here where you're not going to get very much of a move. It's just a horrible trade. But perhaps today we get a short-term buy signal. You can risk against the low versus a couple of pips, and then use your own judgment as far as price targets, the upside or downside, because I just think rallies are going to fail. Breaks, there's not much room to work on those either in the short run. When politics change, or even we just start to get some free movement here, then that would be a different story, and maybe we do have that happen over, after tomorrow's meeting. I would say wait for the meeting to be done first, because that's the most important thing. Let's see what the bias is. If they don't do the full point and they do the 3/4, it meets expectations. As long as Powell's speech doesn't change very radical, then I would expect to keep that going, meaning that we know where the Fed is at. That also keeps dollar strength coming in, and then that would also support this buy signal. So if today that occurs, remember the session's not over, it's just before 1 o'clock. You need to have another couple of hours before they roll the currencies, and we know where it's at. But this potential buy signal is here. Let's see if we have any questions on YouTube or chat, or the YouTube chat, or the Twitch chat. We do not. All right, let's go to BTC USD. All right, this market has been snaking along and trying to hold a rally, but it just doesn't seem to be able to maintain. Now it has been hitting support over the last couple of sessions. A lot of this has to do with the expectations of dollar strength coming in, I believe. It's kind of funny because Bitcoin is going where gold goes and the market goes, Bitcoin seems to go. And especially when you have a big rally going on as well in the interest rate markets. So it's kind of funny how Bitcoin is not the flight to quality, any of the things except for on a technology basis that it's supposed to be. It's not a hedge against inflation, obviously. So, but we'll see. Right now it's bearish. The trend is your friend on a daily basis and hourly basis. Weekly basis is kind of neutral, and it is trending higher, making slightly higher move highs and slightly higher move lows. The only thing is it really doesn't last or hold any type of real momentum to the upside. Who knows? Maybe we'll see a little turn, get a little chance for people to get out of their Bitcoin at a higher price so than it is right now. Oh, thanks for the like there on YouTube. All right, so one you really want to look at, though, is the Ethereum US dollar. Ethereum US dollar has a little bit more play. This one has more bang for your buck. It also is the better technology and has probably, I think, the longer lifespan. And as far as being, once again, giving you bang for your buck, this is the place to be. It's not just because it's trading so much lower in price. percentage basis, you get the most bang for your buck. So on any move in Ethereum, you're not seeing. It's the irony is that for a long time, Bitcoin was like almost like the dollar index. Even though it's not an index, it's not a compilation of multiple coins or anything like that. But it was behaving like that. It was kind of like the dog that wagged the tail of the whole crypto sector. Now Ethereum seems to be the tail wagging the dog, meaning Bitcoin, which then wags the whole industry. And when Ethereum wags, you're just not stopping that momentum. So we'll see. I think if we can get a bullish breakout, and if you'll notice too, is that Bitcoin had been sliding for days. This one here had a bearish engulfing line sell signal. If you read the book High Probability Japanese Candlestick Patterns, you'll learn how to trade it. And if that is a solid sell signal, you're looking at getting down to right here and right here. Very tight little area here. So down to 1,274, down to 1,081, excuse me, 1,181. This would be a good corrective zone. I could see this market holding up in this area and then making a run towards the highs. I don't think you're going to see it explode up to where it was just, literally just a few months ago. But I do think you have a very good chance at still buying dips, kind of like what it's set up for here. We have a sell signal. This puts us going into here. If we get a sideways trade to develop here, anything can happen. But I would lean towards another rally up, at least kind of towards this high 60 at 160, at the 160 handle. All right, now let's go to the XMR US dollar. Monero trudging along, trying to maintain a rally. It's been down. It's made a lower move low today after yesterday, so it's following through to the downside. But it's boom, it's trying to hold up. You can see that where Bitcoin had been inching along, these other ones had a much steeper slope. This one being one of them. Not saying that it can't get a sell-off, but you're making higher move highs and higher move lows, being today being one of those days. We'll see if the low holds. I would say that right now you could risk the low of today as your indicator and have an expectation of this going up to, I would say, the 160 to 180 area. Monero's got a great technology. It's very sustainable, very usable, and very marketable as a whole. And I think that's one of the reasons why you don't get very much press on it, is that it's a total utilitarian cryptocurrency that works and serves its function, unlike so many others do. All right, let's look at the Doge. Doge USD. All right, Doge USD has been treading water here. You can see that this one, however, has been making lower move high. It did come off this lower move low here, made a lower move high, and then here made a higher move low, but then it made a lower move high. So this is still trending lower. Okay. All right, so I would expect, since Ethereum and Bitcoin are down, if we get a nice sell-off in Ethereum especially, you'll get followed through with Bitcoin, and then we'll take this down below the 0.0579 cents. I had this thing going basically down to zero long term, but we'll see what happens. Maybe it gets some float. I would, if this does get any rally up towards like 10, 11 cents, I think I have a cap, a super cycle long-term cap of 11 cents on the Doge. I don't even think it's going to even make it even close to that. That would just be the extreme that I have it, where I guess it could get to. All right, let's see. Do we have any questions out there? No, we have no questions on YouTube, no questions on Twitch. All right, you guys have been rather quiet today. Let's go back to the Euro US dollar. See where we're at. And okay. So, Euro US dollar still hanging near its lows. I think that most of the trading is done for today. Usually, lately, there's been, when the interest rate market shut down at 2 o'clock Central Standard Time, Chicago time, then we've had a lot of action in the dollar. They started to move. Today, with it being a Fed meeting and tomorrow being the second day of the meeting, probably not going to happen. I think that that one signal that we showed you has a very good chance of occurring because of that. Same with this. I would think that the bank traders, they're just not doing anything right now, because why would you? Wait till the news. If anything, they're putting on lots of option spreads and waiting for the outcome of what Chairman Powell has to say. All right, let's check Discord real quick. All right, nobody there, and nobody there. All right, well, we've covered all the major currencies and some nice cryptos as well. I hope you guys got a lot out of today's episode. And if you haven't done so already, make sure that you like and share the the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And check us out at youtube.com/Forex Trading Unlocked for all your fantastic Forex information and needs. With that being said, I'm Teddy Keckstedt from Forex Trading Unlocked. You have a great day, and make sure you go to forex-trading-unlocked.com.